What's going on, everybody, and welcome back to the channel. So in my last Unity stock analysis video, I got a ton of good feedback, and really what I could see from that is that a lot of you guys are bullish on this stock. So today's video is going to be a stock valuation update because since that video was released, this stock has been pumping, and because of that, the valuation has gone up significantly. Now, today's video isn't going to be my usual 10 to 12 minute video because I really want to focus on just the valuation for the purpose of this one. But if you guys want me to start a new series where I just do valuation updates on whatever stocks you guys want, let me know down in the comments section, or you can smash that like button because that also tells me that you like this content. And real quick, one last thing before we get into today's video, I do want to let you know there is a new EV SPAC that I just recently started buying, so you can expect a video on that later this week. It's one that I am super excited about, and they also have a pretty unique business model compared to all the other EV SPACs that we've seen. So with that being said, let's get right into the valuation. So for the format of this, what I'm going to do is I'm first going to talk about what the valuation was back when I made that video 2 weeks ago. Then I'm going to get into what the current valuation is, and then I'll talk about pretty much how much growth I think is already being baked into this stock. So since I made my last video on them back on November 18th, the stock's price has gone from $115 to now $151 a share, which is a pretty substantial move for just 2 weeks. Now, in terms of percent gains since my last video, Unity is up more than 25%, which would actually be considered a pretty good gain over a full year in normal market conditions, let alone in just 2 weeks. And if you go back 1 month, the stock is trading below $100 a share. So already this stock has moved up more than 50% over the last 4 weeks. So now that we've covered the recent stock performance, I want to dive deeper into the numbers so we can see how these gains have affected their valuation, because when I made that video 2 weeks ago, they were already trading at a rich valuation. So 2 weeks ago, Unity was trading at $115 a share, which at the time gave them a market cap of about $31 billion. And that's using roughly 270 million outstanding shares. Now, their revenue guidance for full year 2020 is about $755 million. And at that valuation, they would essentially have a forward price to sales of 41, which, to be honest, is already pretty expensive, so you could imagine where this valuation analysis is heading. Now, their current valuation metrics look like this: share price of $151 with a market cap of pretty much 41 billion. Now, using the same 2020 revenue guidance, this gives them a current price to sales ratio of 58, which is just ridiculous. Some of the richest valued companies like Tesla, Shopify, and even NIO have better price to sales ratios, with NIO's being a 48. Now, I almost included Zoom in this, but they have a 104 price to sales and 147 forward PE, so they're really in a league of their own, but I think you get the point. So the question becomes, how much future revenue growth is being baked into the stock price? Now, to answer this, I'm going to attempt, or make my best attempt, to predict how much revenue they'll be making in 2022. So Unity hasn't given revenue estimates for 2021 yet, but analysts have them growing 26%, which would be $957 million in revenue next year. Now, at today's market cap valuation, this is a price to sales of 39.7, which is still pretty high. So if we assume they grow revenue by another 25% in 2022, that would be revenue of $1.2 billion and a price to sales of 31.6, which is still not good, but definitely much better. So there's really no other way to put this. As much as I love Unity stock, it's just simply overvalued right now. And this is something that Wall Street has even picked up on. Earlier this week on Monday, one analyst from Oppenheimer cut his rating on Unity stock from a buy to neutral and from outperform to perform. He cited his reasoning for this was because we just simply can't stretch any further on valuation, which makes sense because I feel the same way. Now, this doesn't change my long-term outlook on them that I stated in my last video, and even the analyst stated that they still love Unity and believe that the creative market will see exceptional expansion over the long term. So based off my estimates, I believe right now the markets are pricing in 2 to 3 years of future growth, which I mean, at the end of the day, the markets are not pricing in what's happening now or what happened in the past. The markets are always looking into the future, but that's still a pretty far stretch on their valuation right now. There's really no arguing that a 50 price to sales is undervalued or even fairly valued, because that's still pretty rich, especially when, let's be honest, the company's only growing from 20 to 30%. This isn't one of those high super growth stocks like Nextech that are growing at 200, 300%. And to be honest, even Nextech is trading at a cheaper price to sales than Unity. So personally, I would like to see Unity fall below $120 a share before I continue adding to my position. So to give you guys my final thoughts on this, Unity is still a stock that I believe in over the long term, looking out 5 to 10 years. As I mentioned in my last video, Unity is just starting to enter several industries that are just starting to adopt 3D, AR, and VR technologies. And if you've been following the channel for a while now, you'll know that I am super bullish on this industry as a whole, because I really feel that this is the next wave in technological evolution. I believe the global pandemic has really accelerated the adoption of this technology, and I truly believe that it is here to stay. And I also really believe that consumers are blind to the changes that are coming. I really feel that people don't quite understand just how close we are to having technology like 3D, augmented reality, virtual reality, all being integrated into everyday life in one way or another. I truly believe that we are at the most 5 years away from this being our everyday life. And at its core, Unity is a direct play on this growing industry, because companies from all over the world use their platform to create the 3D, AR, and VR features that you see in apps. So no matter what happens, whether company A fails or company B fails, Unity is not going to fail, because all these companies use their platform as the backbone and the foundation to create these amazing features. So I hope you guys enjoyed today's video. And like I said, if you want me to create a playlist or a series revolving around valuation updates, let me know down in the comments, or just smash the like button, because that works as well. And if we get enough people requesting it, I will start a new playlist dedicated just to this and the stocks that you guys want me to cover. So thank you guys for watching. Be sure to subscribe so you don't miss my next video on this EV SPAC. And with that, I will catch you guys on the next one.